What if I told you that there's a hidden government plan buried inside of a massive spending bill that could, in fact, teleport the markets? We're talking stocks. We're talking crypto straight to the effing moon. You see, President Trump's one big beautiful bill, or the OBB, B, 3Bs, the triple B, whatever, has its fierce supporters and its fierce critics. The supporters say it's a boost for the economy, baby. Well, the critics warn that it could doom the U.S. financially. Who's right? Well, stick around as we dig deep to uncover the truth here and what it means for your bags, most importantly, because the implications for the trillions of additional spending are very big and definitely have the potential to have a big impact on your portfolio. Now, according to the U.S. Congress's Ways and Means Committee, the One Big Beautiful Bill is the largest tax cut in U.S. history. It contains tax cuts, it contains spending policies, all that form the core of Trump's second-term agenda. It permanently extends the individual tax rates that Trump signed in his first term a few years ago, which were originally set to expire at the end of 2025. Now, instead of passing some kind of piecemeal legislation, the idea here is to do everything at once. You're going to cut the taxes, increase the military spending, more energy investments, which America needs if it wants to be the AI leader. The projections are America basically needs to double its energy production, which is nuclear, baby. Nuclear stocks to the moon. Give businesses new incentives. Controversially, reduce spending on federal programs like Medicare. The goal, supercharge growth. The cost, well, that's where things start to get pretty messy. And by the way, the supercharging of growth better really happen because the U.S. is going to need to grow the economy at between 4 to 7% a year to outgrow the debt, okay? The Congressional Budget Office projects U.S. annual debt will surge by $3.4 trillion over the next 10 years every year. Well, the Cato Institute is saying might even get up to $6 trillion by 2034. It'll just keep getting worse. In this bar chart projection, it's grim. Total U.S. debt could hit $55 trillion. $55 effing trillion by 2034. Up from $37 trillion today. Just an extra $20 trillion on top of it in less than 10 years. Any way you slice it, these numbers are far from being big and beautiful. Well, they're big, but they ain't beautiful. We're starting down a very dangerous debt spiral that could shake things up globally right as AI mass unemployment hits. But here's the twist. It might just be very bullish for some of us until the Great Reckoning, the new Great Depression happens. But more on that later. Let's start with the bad, okay? First, there is the issue of pork. Big old stinky pork. Bloated spending, all kinds of BS in there, right? Even Elon Musk chimed in saying the bill looks more like a political bribe than real policy. Why? Because along with tax cuts and business incentives, the bill also allegedly includes a lot of handouts and a lot of unnecessary programs to win over votes. Classic pork barrel politics, right? Of course, the White House denies all this. Everything's massively essential. Elon, man, is trying to cut all the spending of the government. They were never going to cut spending. They were always going to increase it by trillions. Now, naysayers claim the big, beautiful bill will jack up government spending. It's not always a bad thing since government spending is around a quarter of U.S. GDP after all. But the real worry, cuts to social services and Medicaid, could spook retail investors. As always, the government's never going to save you. The government's not your friend. You have to save yourself. You have to invest. You have to outpace the insanity of the system. Of course, there are two sides of this, but we don't want to go down the rabbit hole too deep here. Rather, let's look at how all this affects crypto investors like us. You see, when retail feels financially shaky, they tend to cut back a bit on expenses. They run away from risky assets like crypto. You're likely not to bet on dog coins if you feel like you cannot afford the basics, right? Then there's the debt time bomb. Whether the estimated deficit numbers are actually going to come out true or not, or if, the U.S. economy just booms so fast and so hard thanks to the AI boom that they just grow at such a crazy rate and taking so much tax money that they pay off the debt, which is highly unlikely, but okay. With trillions in new spending and lower taxes, the debt absolutely is going to explode. And when that happens, you either need to cut back later, raise taxes, or more likely, print more money to cover it, which means that there's going to be even further monetary debasement, meaning your dollar's going to be worth even less. You got Bitcoin yet? That's where the trouble begins. See, the Federal Reserve is already in a very tight spot, but this kind of fiscal pressure could force it to start cutting rates, despite inflationary risks. And when the Fed turns on the money printers at some point in the future, and they will, they always do, guess what's going to pump the most? Cryptocurrencies. stocks, particularly tech stocks. So yes, while the big, beautiful bill might sound pretty reckless to those who are against it, the ironic twist is that it may be one of the big factors to unleash the great golden bull run over the next few years. Maybe one of the most bullish macro events for crypto in the coming years. And yes, I said years, not the next 6 months where the 4-year cycle ends, but literally we could go for years, okay? Especially if we correlate more with the stock market or have the gold ETF following sort of along that trend. So there is good news here. There's a lot of good news. Actually, I want to dive into that. But before we do that, guys, if you're trading crypto coins, you need to get yourselves an account over on BitUnix. It's the best damn place to be trading crypto coins, where I'm doing a lot of my futures trading these days. No KYC, no VPN means it's literally available to anyone, anywhere. That means you can trade with freedom. You can enjoy your trading. Long the rips, short the dips, all the big coins. They got your dog coins and stuff like that too. Plus, when you use this link right down here, exclusively, you're going to get some insane bonuses. So listen up to this. You can get up to $400 in deposit bonus. That means you deposit $1,000, you get $200 back. You deposit $2,000, you get $400 cash back money into your account. That's crazy, man. Plus, you can get up to $9,000. That's a crazy amount of money in trading bonuses. The more you trade, the more money you get back in your account. It's awesome. It's a limited time offer. Link down below. Now, remember, guys, life's electric, life's a vibe. So let's talk about the good news here, okay? First up, the good news, more disposable income for people to buy dog coins with. One key feature of the bill is expanding tax exemptions, emphasizing historic relief for working and middle-class Americans, including a 15% tax cuts for those earning $30,000 to $80,000 a year, which is probably the majority of Americans. Then there's provisions for making tips and overtime pay tax-free, which is massive for people that have been working really hard out there, struggling families and stuff like that. Now they're going to have free money to ape into dog coins. It's not just good politics. It puts more cash into the hands of everyday people. More cash means more consumption, more economic boom. And in today's environment, it also means more investing, because people tend to degenerate their money into all kinds of random shit. With apps like Robinhood and Coinbase just a tap away, spot Bitcoin ETFs now live, altcoin treasury companies, all the stuff, man. It's never been easier for that extra income to flow straight into cryptocurrencies and stocks, which is where some of it always ends up. Next, you have corporate tailwinds. Big business groups, including the U.S. Chamber of Commerce and the Business Roundtable, have both applauded the Senate's passage of the bill. They're loving it, man. For example, the package would restore the 2017 tax break, allowing businesses to be able to fully write off equipment costs in the first year, which is massive. That's been phased out since 2023, right? This makes things a little bit easier on businesses, especially in this higher interest rate environment that we have right now, okay? Especially for manufacturing companies, which the U.S. wants to bring more manufacturing back, which contributes literally trillions to the U.S. GDP. Big deal. Small business deductions will be increased from 20 to 23% and made permanent. These changes could unlock a lot of new profits, which then get recycled back into business expansion, into hiring, into stock buybacks, and who knows? They might even start putting crypto on their damn balance sheets, because that's what companies do nowadays. We got extra cash, screw it. Let's buy some dog coins. Come on, when Dogecoin treasury companies, guys, that's when you know we're getting frothy. Think about companies trying to copy the Michael Saylor blueprint right now. A lot of Bitcoin treasury companies, Ethereum treasury companies, Solana XRP treasury companies, getting nuts, man. These windfalls from tax reliefs could indeed trickle down to digital assets, once again, pumping our bags. Now let's talk about the real elephant in the room, though, dollar debasement. Picture this. The U.S. debt skyrocketing to $55 trillion. It's almost a joke, isn't it? It's insanity. They're going to double the debt, guys. With interest rates stuck high, the government's basically writing checks it can't cash. Okay, they need to devalue the dollar, literally, or they can't pay their bills. And when push comes to shove, the Fed's got no choice. They'll either slash rates to zero or, brace yourself, start printing disgusting amounts of money to monetize that debt, screwing you over in the process. What happens next? The dollar takes a beating, just like it did in 2021. Fiat loses value. Smart investors know that. Guess what they do? They lock their cash into things that are less likely to lose value. And while it looks bad, that is, for regular people. If you're an investor, you can at least have a way out. Hard assets, maybe you're a gold bug, maybe you like the commodities. But of course, the one asset to rule them all, obviously, is Bitcoin. Why do you think asset managers like BlackRock and Fidelity are telling their clients to scoop up as much Bitcoin as they can right now because they know the writing's on the wall. Here's the deal. In the short term, the big beautiful bill tax cuts are like rocket fuel for investments and expansion. Perfect timing, of course, as we're still waiting for the bull run to actually happen. I know Bitcoin's been in a bull run. Your altcoins, except for maybe a few of them, have been just kicked in the balls nonstop. But long term, of course, this is all bullshit. Kicking the can down the road to yet more unsustainable, horrific debt that'll be unpayable and debase the currency and fuck everybody over. This debt's a sinkhole, dragging everyone deeper into the shit. The worst part, our kids are going to be the ones stuck cleaning up the mess, but not your kids maybe, because you're smart, you're going to invest, you're going to make sure they're taken care of. But monetary debasement's coming. Social security systems will not cover basics. You have to save yourself. The government's not coming to save you guys. And here's the good news. Bitcoin was born for this chaos. Satoshi designed it to thrive when fiat crumbles, and it's already thriving as fiat is crumbling around us right now. Hard cap to 21 million coins is decentralized, and it's the perfect antithesis against the money printer. So short term, yeah, this bill's going to ignite the craziest bull run probably we've ever seen in our lives. It's not going to happen overnight, but for the long haul, it's brutal, man. It's brutal for paper money, but a jackpot for investors. That's why I will be holding my Bitcoin with diamond hands and why I will be selling the shit out of altcoins as the money starts piling in. This is my play, not just for myself, but for my kids' future. What's your play? Stacking sats, or you're going to hold dirty, dirty fiat? Let me know down below. Thanks for watching.